Metals, the picture is firmer but less dramatic. Spot platinum is just above $1,650 an ounce, up only a fraction of 1% on the day, according to price data from APMEX, Bullion Vault and Trading Economics. Platinum is still up by more than 70% over the past year. Palladium is trading between about $1,460 and $1,480 an ounce this evening. That's roughly 1% higher on the day based on data from APMEX, JM Bullion and Trading Economics, leaving palladium more than 50% higher than a year ago. In headline terms, the last trading day has brought a modest grind higher for gold, a sharper move up in silver and gentle gains in both platinum and palladium. Let's now look more closely at how that unfolded across the main trading centres in the past 8 to 12 hours. Through the Asian session overnight, gold traded in a tight range. Prices were broadly steady, holding above the psychologically important $4,200 mark. Market participants in Tokyo and Hong Kong reported light volumes and a tendency to fade small rallies. That behaviour reflected a sense of fatigue after a series of record highs in October and November, according to recent commentary from Reuters and the World Gold Council. Gold has delivered its strongest annual performance in almost half a century, with scores of new record highs logged this year. As Europe opened this morning, liquidity improved, but the tone stayed cautious. Intraday charts from Bullion Vault show gold trading between roughly $4,190 and $4,230 an ounce through much of the London morning. Traders described a tug-of-war between slightly firmer United States Treasury yields and a softer United States dollar. On one side, benchmark 10-year US government bond yields are still near 4%, according to MarketWatch and Federal Reserve-linked data services. That level of yield represents an opportunity cost for holding a non-yielding asset like bullion. On the other side, the US dollar index has slipped towards 99, according to investing.com and TradingView, extending a gentle decline seen in recent weeks. A weaker dollar tends to support dollar-priced commodities like gold because it makes them cheaper in other currencies. By the time New York trade was in full swing, the dollar had eased slightly further and yields were stable to marginally lower. That combination nudged gold towards the top end of its intraday range. According to JM Bullion's live feed, spot prices briefly reached the mid-4,200s at the start of the US afternoon before easing back a little into the close. Reuters and other news wires characterized today's trade as consolidation. Investors have been reluctant to chase the price aggressively higher ahead of key US economic data and the Federal Reserve's December policy meeting later this month. Silver's intraday story has been more energetic. After a quiet Asian session with prices oscillating around $57 an ounce, silver began to outperform gold after European markets opened. Trading Economics shows silver pushing above $58 an ounce during the European afternoon. The move was helped by continued demand from investors who use silver both as a safe haven partner to gold and as a higher volatility play on similar macro themes. According to Investopedia's recent review of the silver market, the metal has benefited from tight physical supply, record industrial demand, and expectations for lower interest rates in the year ahead. Deutsche Bank research cited in that review notes that industrial availability of silver is at its tightest on record, with lease rates rising to their highest levels since the early 2000s. That tightness has been echoed by the Silver Institute and by Metals Focus, whose August market report highlighted strong demand for bullion coins in Europe and persistent net buying by retail investors. In the last 8 to 12 hours, those structural factors have been reinforced by short-term dynamics. Reuters reported earlier this week that silver hit fresh record highs after weak US economic data reinforced expectations of a Federal Reserve rate cut at the next meeting. With these expectations still firmly priced into futures markets, silver has attracted buyers on every dip. Today's roughly 2% rise extends that pattern, though at a calmer pace than the sharp jumps seen earlier in the week. Platinum and palladium have traded more quietly, but with an upward bias. Kitco's intraday charts show platinum moving between about $1,640 and $1,670 an ounce, ending the European day with a small net gain. Trading Economics reports that platinum is up around 8% over the past month, with most of that advance already in the price before today's session. Palladium has been somewhat livelier. It's benefited from short covering and an ongoing reassessment of supply risks. Trading Economics puts today's palladium price near $1,470 an ounce, about 1.5% higher than yesterday. Over the past month, palladium is up over 6% and more than 50% over the past year. Analysts link this to financial buying and to shifting expectations for auto catalyst demand as electric vehicle adoption progresses more slowly than some earlier forecasts. In the wider platinum group metals space, smaller markets like rhodium and iridium are less liquid and draw less intraday commentary. However, guidance from Johnson Matthey and Metals Daily suggests that the overarching theme remains constrained mine supply, particularly in South Africa, offset by gradual changes in auto-catalyst technology and growth in recycling. Let's now examine the macroeconomic and policy backdrop behind today's moves. According to the World Gold Council's Gold Demand Trends reports for the first and second quarters of this year, underlying demand has remained solid even as prices have reached new highs. The Council reports that total gold demand, including over-the-counter activity, rose by about 3% year-on-year in both quarters, with the dollar value of demand at record levels. That same data shows central banks continuing to buy gold at a historic pace, with annual purchases above 1,000 tonnes for 3 consecutive years. Reuters' Breaking Views column has underlined how unusual this year's gold rally has been. Historically, gold prices tend to move inversely to real interest rates. In 2025, by contrast, gold has risen over 60% even as real yields have stabilized or edged higher. The column argues that structural changes in the global financial system, notably the US decision in 2022 to freeze Russian reserves, have raised concerns among some emerging market central banks about the security of dollar assets.
Hey, I just found the Wessexmint and it's a game changer.
You can actually buy real gold and silver online.
It's simple, no jargon, and you can start investing for the price of a coffee.
They even teach you how it all works with their academy.
Honestly, I wish I started sooner.